Welcome to our backyard. This is the Backyard Philosophy Podcast. We are two friends having a discussion after everyone else has passed out or gone to bed. Grab a drink and listen as we discuss everything from automation, space exploration, and why the meaning of life is 42.
So what's the difference between a bank investing money and a gambler? Well, the truth is, not that much difference. And today we're going to talk about banks, how they form, how they work, how they intertwine with the government. But before I get to that, Nick, how are you? And what are you drinking?
I'm doing great, and I'm going to be confused because this bank's whole finance stuff is not my forte. But and to further represent my confusion, I am drinking some Busch Light. What about you?
I'm missing space every single day. And I'm drinking some Balacoons, some more bourbon to sadden my woes. But yes, banks. I think it might be appropriate to start with, where does the word bank come from? Well, the word bank comes from an Italian word meaning banco, which stands for bench. See, the first banks that most resemble modern banks happened in Italy. And on a street, in a district, they had a set of benches and conducted business there. People would sit on the bench with the bankers at this time and they would talk. And if the bank or banker lost all the money or the people just simply got angry, they would break the bench. Bancarotta, breaking the bench. Bankrupt. And that's where we get the word bankrupt from.
That's hilarious.
And from there, a multitude of different banks have formed. And we'll probably do an episode on how banks have influenced history or how banks have changed over the years. But right now, me and Nick are going to be focusing on 21st century banks mainly. And Nick, there's a lot of different types of banks, and banks are you might have bit off more than we can chew. Let's just say that.
Yeah, I think we definitely did because so this is going to be our little overview of banks in 21st century, but there's a lot of individual financial scandals and all this stuff that we could go into, but we're not going to deep dive into any of them. Just kind of give you a rundown and how we got here recently and where we're going.
I think a good place to start would be the different types of banks. I never realized how many different types of banks there were. Most people are familiar with, the checking and savings account. Maybe they have CDs, maybe they have investing, but those are just retail banks. Then you have commercial banks, which are for corporations, banks for businesses. These banks handle business finances at large, massive scale. You have investment banks, banks designed to help businesses raise capital and help if a company wants to go public or sell debt. Private banks, banks for individuals, which large sums of money, aka millionaires, they pretty much are just private banks to help with certain money amounts because different money amounts come with different regulations, which we'll probably get into a little bit later. Which begs the question to me, what's the difference between an investor and a bank when it's just a private bank? Not quite sure how that one works. But like I said, we're fools with a capital F, and forward we go. There are central banks, which are Federal Reserve banks. Currently, the law extends, there's 8 minimal Federal Reserve banks to up to max 12 Federal Reserve banks. And the Federal Reserve Bank is a bank for banks, if that makes sense. This is where banks kind of borrow money, where they kind of send money, again, the banks for banks. Followed by central unions, a non-profit organization owned by their customers. So, from what I understand, a central union is a bank that makes decisions based on the clientele that is moving their banks around, their investments. They're seeing a lot of investments coming from this sector, so they're going to manipulate and play with that. It's very similar to mutual banks, which instead of being owned by the customers, they're actually owned by members. So if you're a member, you can actually own a portion of the bank and make decisions on that. And lastly, before I hand it off to you, Nick, 'cause I'm sure the people listening are tired of me telling the different types of banks, we also have online banks, which is banks that no longer need a physical spot. It's all done by servers remote and the internet, which is, boy, fascinating time we live in.
Yeah, so I think some of the legislation that most influences the current economic system and banks that we live in right now is basically all reaction, solution, depending who you ask, to the Great Depression, and that would be the U.S. leaving the gold standard. This isn't. This is kind of banking, more finance. I don't know how you'd clarify this, but it's kind of important, I guess. And then, so the gold standard went away in 1933 because people started hoarding gold and they lost faith in the dollar, and so they decided to get rid of the gold standard. And as the supply of gold isn't fixed, so it's not perfect, because if someone brings a bunch more gold, it ruins everything. But then you just have to have faith in your dollar, and there's nothing supporting behind it. You have faith in the institution that dollar represents, that they'll be able to repay your loans.
It's called imagination.
And then the other one is insuring banks. So you've probably seen at the end, like any banking ad, it's like member FDIC insured, something like that. And that's because basically you could put your money in a bank, and during the stock market crash, like if there's a run before that, like and there is no more money left for the bank to give you, there's no more money left to give you. And because, people didn't like the fact that banks didn't have their money, the government put like bumpers, I guess, trying to make it safer so that there's no run on the banks, basically saying we will support, if we need to, we will help recover the money. And but you have to do certain things to become FDIC, which stands for Federal Deposit Insurance Corporation.
Well, before you get too far into insurance, I want to say that for in a second, because the insurance to me was quite interesting, because that's just a whole that I want to say that as a major topic point, which I don't want to quite get into yet. I figured a good spot to kind of bring back to the 21st century is, how do you even start a bank? And I don't know if you have anything on that, or if I should hop in on that.
I have no idea. Basically, from what I understand, the best way to start a bank is to know someone who already started a bank. But I guess that wouldn't be starting, that'd just be taking over. Because a lot of these banks have been here for a long time. And especially the Depression really weeded out the ones that weren't going to make it.
God, how long has Wells Fargo been around? Like, what, since 1846 or something ridiculously long?
I think earlier than that. They were pretty big by that time because they were securing like all the gold, all the stagecoaches and shit. So probably earlier. I have no idea.
Damn. Well, for the 21st century, to start a bank, there's actually a lot of regulations and rules on how to actually start a bank. It's actually a very lengthy and elite process. So first, you must identify a need. You can't have like 18 banks right next to each other. If there's already a bank serving a good portion of the district, you can't start your own bank, which is really weird, because if I wanted to start a restaurant and there's already like 12 other restaurants, legally I'm allowed to do that, but not with banks, which I found interesting. You need quite a bit of capital. You need, depending on where you want to put it, anywhere from 12 to 20 million minimum. Let me repeat that. 12 to 20 million minimum to start a bank. A lot of time, because the process is not easy. Filling out paperwork, filling out forms. It takes about a year and a half with lawyers to get the permits of starting a bank, which I find funny, because that's actually faster than it is. It's actually faster to start a bank than it is to get a suppressor. So I found that funny.
That's pretty funny. But I have a question. How many new banks are being formed?
So it's actually kind of interesting. Right now, I don't know with the current COVID times, but there's a surprisingly a large amount of single store banks. So the rules and regulations for having multiple branches versus a single bank are kind of different. Yes, there's some overlay, but it's more night and day. It's quite fascinating, and from what I can tell, depending on the bank, it's almost like opening up a stock market company but you're insured by the government. Like there's a lot more safety and regulations for your investing. The banking part of holding people's money is just a added bonus. So, like you mentioned, the FDIC, if I remember correctly, there is, as of 2020, 4,377 insured banks by the FDIC. And the amount of banks have been going down over the years, whether that's due to, coming too hard regulations, big companies buying out the little companies, just making it too hard to survive, et cetera, et cetera. Because I might be guilty of this, but I kind of want to bank with a known brand because they might have better insurances, better qualities, et cetera, et cetera. Might make it harder. But banks have been decreasing, but banks still form for a multitude of reasons. And like I mentioned, with all the different types of banks, you kind of have to choose what type of bank you want to be. But you don't have to choose just one. Most banks wear multiple hats, so you're not just checking savings, you might be investing. There's a wider range you can combine. So if you want to make it a federal bank, like a federal charter bank, you have to send a different application to the office of the comptroller of the comptroller of the currency, which is a really messed up name. And state banks and federal banks are so similar, yet so different. And for those wondering, a charter bank is just a financial institute. Primary role is to accept and safeguard money, deposits, and lend money out as well. For those who don't know, there's also like a kind of subcategories, like a correspondent bank and a intermediate bank. They're pretty much just middlemen for transfers. So correspondent bank handles multiple different currencies, while a intermediate bank only handles one currency. So those are banks that kind of focus on wire transfers. Like your basic retail store where you have your checking savings probably does wire transfers too. That's very common. That's what I mean by they can have multiple different hats. They can wear those different things. And I think that's kind of how banks start and form, just kind of synapses. But then you got to choose what kind of insurance banks want. And Nick, can you pick up where you left off? Sorry, I just wanted to get out of how to start a bank in the modern age.
Yeah, I just never really, think about people starting banks. Doesn't seem like something anyone goes into.
I am curious on how many private banks there are, or what are the business banks? Can a retail bank and a business bank do the same thing, depending on its size, or are those can one bank do something that the other can never cross into? Like you can't have cross contamination, I guess is the best way to say it. Can a private bank never handle what a business bank does? I don't know. I don't know. Again, this is kind of like a 101 crash course for me, so excuse my ignorance.
Gotcha. Yeah, I have no idea how to answer that. So what happened in the Depression? Stock market started to crash. People ran to the banks, creating a run on the banks, which is when everyone tries to get their money out because they don't want to be the last one in there with no money in the bank. And they technically have money in the bank, but the bank doesn't have enough money to pay off all of the accounts that are in there at that time because they loan certain amounts to other people and such stuff like that. And so being FDIC insured, now they are insured up to $250,000 per depositor. So if you go into a bank that's FDIC insured and you put in $250,000 and the stock market goes out and you go to recall all your money, that means that the bank or the insurance agency, that you'll get your money. So you're going to get that $250,000. But if you have $300,000 in there and there's a run on the banks, you're only going to get that $250,000 unless the bank has all your money or has enough money to give it to you. And then there's an easy way around that. If you are unlike me and Mike and you have more than $250,000, it's per account. So if you have $500,000, you put half in one FDIC bank and half another FDIC bank, and then there you go, you're covered for the full amount. So if that's something you have to worry about.
Never put all your eggs in one basket. Also, fun fact, the Federal Reserve is also the one who manages inflation and is composed of a board of members appointed by Congress. I found that very interesting with these economic times.
I mean, this is all Hamilton's fault, really, for his wanting of a central bank.
The federal bank's actually, the history of it's really interesting, and we'll probably do a separate episode on that. But the reason why Missouri has like two is because they had like bribed one of the congressmen. And to go back to what Nick was saying with insurance, there's a multitude of different insurance, and like he says, most money doesn't exist physically at the bank. It's insolvent physical currency. So we'll touch on it in a bit, but banks really make their money from investing slash giving out money on loans and fees.
And I just continue on after this. I just have a quick, interesting fact I picked up. So when the U.S. was on the gold standard, so every dollar had to be insured for only 40 cents of gold. So it's not like one U.S. dollar was worth $1 of gold. It was only insured for 40 cents of gold. And we got rid of the domestic gold standard in the 1933, I think. We didn't get rid of the international gold standard till later, like the 70s.
Well, I think it was 1933 because I know in 1933 the first bank insurance came with the Glass-Steagall Act, which was in 1933. So it makes sense that they implement the act and do away with the dodo.
But then I guess like internationally, the U.S. dollar was still backed by gold.
Everyone likes shiny things. Gold's one of them.
Well, it's really funny that we spent, this is getting a little off the rails, we spent a lot of time trying to get a gold coin to be the standard compared to like a silver coin, like the Mexican silver peso. We went into like a financial war, I don't know what you'd call that, to make it so that most places would use a gold coin instead of a silver coin. And then we're like,
I mean, Fort Knox exists for a reason.
And then we're like, yeah, no, we don't want it. I mean, part of that probably is there's a lot of gold in the United States, so not as much silver as Mexico has.
Not the not the worst thing, not the worst problem to have. Well, going back to insurance, so along with large withdrawals, like everyone going to the bank getting their money out, they also cover negotiable order of withdrawal. So, say my contract with my bank ends on a certain date. I don't want to renew it. They're ending my contract. You're guaranteed that money. Time deposits, because certain money can only be cashed in or withdrawn at certain times. Like we probably have heard the saying of just wait until next week, then the check will clear, else it will bounce. Kind of like that kind of stuff. The federal government also insures cashier and money orders. Also covers, like Nick said, checking and savings. So, but you know what's also very interesting? What they don't insure, and they quite say this on their website in very bold letters, they don't cover stock investments, mutual funds, life insurance, annuities, municipal securities, safety deposit boxes, and to me, which I was very surprisingly, the federal government does not insure U.S. Treasury bills, U.S. Treasury bonds, or notes, aka currency. I thought that was very interesting.
Well, you would think that would be, I guess I need to learn more about it, because I would, I'm surprised as well, Mike. That feels like I'm missing something.
Yeah, it does. Just a little crash course on the words I said for people who might not be familiar with that. Cashier's check is a check kind of written from the bank that says you have this much money, no matter what's guaranteed. It's kind of like a green light going through. Wire transfer. Wire transfer is like a cashier's check, but digitally. It's transferred from one bank to another. Actually, some banks make their money from wire transferring, like they're acting as a middleman to do that. So pretty much it's just sending money, but it's for like a physical transaction. So you need receipts and stuff like that. Negotiate order of withdrawal. Be honest, from what I understand of that, it's the contract part. I could be mistaken with that. And then mutual funds that they don't insure, life insurance that they don't insure, annuities they don't insure, municipal securities which they don't insure. Kind of makes sense to me because a lot of those are done by other companies, like such life insurance. It's not necessarily done by the banks. You can have other people. Stock investment, I mean, no gambler ever gets insured. Like, hey, if I lose my money gambling, I'll get it back, or else it's not gambling.
You're right. They call that investing in mortgages, Mike.
That is true, and that's how they make a lot of money, and that's also how they brought on the crash of a couple markets. But yeah,
Yeah.
what perhaps as
I was going to say, I guess the better question is, what exactly are they insuring besides like your checking account?
that's all I could find was the negotiation, time, order of withdrawal, savings, time deposits, cashiers, and money orders. Pretty much, those are the only things I could really find that they are insured for individuals. Insured for banks, I had a hard time finding, which is not surprising. But that's just like for individuals, what that's insured. For banks or private banks or business banks, I have no bloody clue. And I don't know if you came across it at all, Nick.
No, not really.
Well, that's disappointing because I feel like that should be very easy information to find. What do different types of banks insure? Because it shouldn't be that hard to
I
figure out. It
think
shouldn't be that hard to
I think it
know.
all depends on like what contract you sign with the bank. From what I read, is that different banks will insure different things, or like per each account that you're opening, they'll insure like a certain amount like in case of a run or something. But I don't know where the government's role in that is. I don't know if that's like a insure with us because we have this, or this is something we're required to insure up to, kind of thing.
Ooh, that's a good point. Yeah, and state and federal banks are a bit different, and I imagine the insurance. I wonder what for private banks and state banks, what insurance companies they use instead of the federal government to insure their banks, and how can I invest in those insurance companies?
Yeah,
But we did talk about a little bit how banks make money from mortgages, which is kind of interest rates on loans or foreclosures, and fees.
all those fun fees, your yearly fee taken out of the ATM fee.
Credit
The
card
app didn't
fee,
didn't do your thing, so they charged you a fee.
3% for using a credit card
Oh,
fee.
when you meant to set up automatic bill pay, we meant you couldn't. So since your bill pay is late because our app failed, I need $25. Get the fuck out of here.
Oh. Well, I'm going to start with interest rates because that is kind of like, well, sharks, shark loaners. That it just kind of makes sense a little bit more to me than fees. Interest rates, which are set by the central bank, aka the Federal Reserve, they kind of cap the amount in interest rate banks can charge on a individual or company, but those are usually negotiable depending on your risks. Banks are pretty much just gamblers. They look at risks, they go, is this a safe bet? Okay, we'll put this invest in. Well, he knows he's a safe bet, so we're going to lower the interest rate. So competitive interest rates matter, but that's how they make their money back. Like if I give Nick $100 and I say, okay, you have 90 days to pay me back plus 5%. So he owes me $105 in 90 days. That's what we kind of mean by interest rate. I don't remember what the cap is for interest rates. I thought it was like 4%, but I think that was for private loans. There's a lot of different types of loans, which we might get into, but banks for the most part, again, are just gamblers. And like a shark loan, the easiest way to tell between a shark loan and a bank is interest rate. If it's 20% or more, it's 100% shark loan. If it's 5% or less, it's probably a bank. That's about the only difference I could really find between the two.
Yeah, and I don't know if that's recent. I know the guy I work with he's like 64. He's an older dude, but when he was getting out of the military in like the 70s, maybe earlier than that, his GI loan was 4%, and that was like amazing. That was like half of what a normal mortgage loan would have been, is what he was telling me.
Okay,
So
I think it's a good point to point out there's different types of loans. So I'm just going to run them through real fast. There's personal loan, which is like an individual taking money for a wide range of things, like, hey, I need to get my driveway done, fix up my house a little bit. There's a mortgage loan, which is loan for buying a house. There's the and mortgage loans. There's a subcategory of mortgage loans and mortgage agreements. Loan is a buyer and the lender set terms together, and if missed payments, the buyer doesn't have the right to just take the house completely away. While a mortgage agreement is if a buyer misses or is late on a payment, the lender can foreclose on the property and take it. You have student loans, which is stupid, which is for loan for education, which you should check out on our episodes on education. You have an auto loan for a car, payday loan, which is a short cash advance. So your next paycheck will go back to paying that loan. You just need that money right then, right now for emergency. Small business loan to start a business. Pawn shop loan for objects as collateral. Home equity loan, your house is collateral. But your GI loan, I actually did not come across this, Nick. Those are the ones I came across. Could you explain a little bit more on that loan?
I believe that it's kind of the same way. It's just you go through like a semi-government agency that gives you a better rate. So I think it's just like essentially another bank, but for members of the military, kind of, where you can get better rates and due to legislation. I'm not an expert in it, so don't quote me on that.
Well, that just kind of makes sense to me that different government agents will have different types of loan rates. I mean, your loan rates depend on how much money you have in savings, your credit score, your prison record, all these other things. Like a lot of things go into to figure out how much of a risk you are and how much the bank's willing to gamble and bet on you.
Yeah, pretty much. I mean, yeah, I did. So I'd always thought I enjoy gambling. I'm a man of some vices, and I like gambling, but I don't go in and like blow all my money. I'll go in with a reasonable amount, and I usually do pretty good. But I just think it's so crazy how it's like, gambling. What are you, some kind of low life, like playing blackjack? Or it's like I'm gonna bet millions of dollars that all these people are gonna pay their mortgages back. I'm like, okay, I'm betting on cards. You're betting on people. Like that seems like
Who's the fool here?
like the way worse thing. And then yeah, it's like you can play the stock market and I don't mean like you invest and a year goes by and you take your stuff out. Like you can do like
You're not getting dividends on your
like
your investments.
But you can do that, and there's no moral qualms about that compared to gambling. I don't know. It's just like a weird thing, but it's, to me, maybe because I'm an idiot, it seems like the same thing.
Hey Nick, if you were a bank, say this is like 2006-ish, and a person fresh out of college full of debt wants to buy a home, but you want to do really good this quarter. Would you give them a loan?
Well, based on what it seems like they're giving out, it seems like everyone's getting loans, so why the hell not?
Yeah, for those who don't understand the joke I was telling Nick is pretty much one of the largest market crashes ever in U.S. history. And I was surprised, Nick. There's like 6 or 7 market crashes in U.S. history. I did not realize there was that many. I honestly thought it was just the Great Depression and '08. But yeah, '08 was people handing out loans who were really high risk and just on a prayer, couple Hail Marys. It's like taking speaking of blackjack, it's like taking a hit when you have 19 in front of you. It's like, yeah, sure, I can get to 21. I just need a couple more. No, you stay, brother. You stay.
Yeah, pretty much. It's yeah, well, it's getting that like a 16 or 15. It's like but like you're going to get your money back, so might as well go for it, right?
Well, the government's insured. If you're insured by the government and they can bail you out, I mean, why not? You got nothing to lose. I mean, in the '08 market, for the main reason the housing market collapsed was too many banks were giving too many high-risk people loans with very competitive interest rates. We'll put that in those words. So it made people buy more loans, more in debt, more spread thin. And when people wanted their money back and people realized, oh, you can't support this, you're just juggling on hot air, all the cards fell out. The house of cards fell apart. There was nothing they could do. And the whole world kind of went silent and in chaos all at once. But luckily, or not luckily, the government, unfortunately or fortunately, bailed out all these banks. And a lot of people were still screwed because of the loans they took. Honestly, Nick, you should know better. Like, I think we said it before on a different podcast, is sometimes you got to live within your means. I'm all for aiming for the stars. But if you take $500,000 loan out and you're only making $40,000 a year, you're kind of an idiot. I'm just getting. Sometimes
Well,
you.
and we're definitely doing that again. Like right now,
No, history's repeating itself. No.
like we're not super looking to buy a house, but we're not like, but the price of houses are crazy. And so I was like, I don't even know how much we could get, a loan for. And it's like without going to like a person, we can get me and my wife. Let's say we make around like 100,000 a year combined. We can get pre-approved for like $630,000, like without talking to anyone, like without going, like putting in our income, just like
Bad credit score, no credit score, you're dead. We don't care. We'll give you the money.
yeah, it's like that's you shouldn't be just like that's like a ridiculous amount of money. That's more than we could like comfortably would like our mortgage would be. Like that we'd have to like have a mortgage and like eat ramen. I like if we bought a $630,000 house. It's like, what are you doing?
Well, a lot of people see that, or they think, I wish I did more research on your credit score, how that affects loans and stuff like that. But people will say, hey, the bank values me this much. I have this much time. That time gets eaten away fast. And they go ahead and pull the trigger. I can't agree with you more, Nick. The housing market is bonkers right now. It is a seller's market. I had a friend who recently she had to pay 50 grand over asking price in cash in order to get the house. And it is odd. You didn't hear it from me, folks, but it's not a great house.
Oh yeah, there's a house that sold next to kind of down the road from us for like 50,000 over asking with visible water damage.
Yeah, we're looking at another bubble. We're looking at another bubble just waiting to pop. Well, if speaking of bubbles, I mean another bubble that's just ready to pop and go enter the market, and it might be a little bit out of left field, Nick, but let me explain my thought before you hop in. Is cryptocurrency. We did an episode on it. A lot of governments don't like it. A lot of banks don't like it. And needless to say, one way or the other, the government is very tied into the banking system here in the United States. And as banks get more money from, like they said, fees, $20 to open an account, $100 to keep it open a year, et cetera, stuff like that. Well, crypto takes that a little bit away. I mean, a lot of the fees done by the banks are for time and energy. Well, with crypto, it's faster. It's quicker. It's more secure than traditional systems. I mean, banks over the years have become weaker and weaker and easier to attack simply because, well, the old security systems aren't keeping up with the modern hacking abilities. Crypto has. Some banks have slowly adapted and started added cryptocurrency into the repertoire. Even ATMs, Nick, which is I find surprising. They have ATMs now that accept Bitcoin. And I am curious on how bank bureaucracy is going to limit the amount you can withdraw or transfer with crypto. Because currently, crypto has no limit on what you can withdraw or deposit. If you're, like Nick said, over 250,000 and you're trying to withdraw that money, there's some legality that comes with it. So if you're a millionaire and trying to withdraw millions of dollars, you won't not be able to get your money out. You will have to go through lawyers, and it takes a long time and process to get through. And after all those legal fees, after the fees of transferring that much money out, you're only getting a portion of the money that you put into the bank. It doesn't seem fair to me, but that's just me old-fashioned. But crypto allows it to happen, which is kind of interesting to me. I mean, you can check it out on the crypto podcast we did, which kind of explains how crypto works and how countries or governments are adapting to it. But crypto seems to be the way of the future for banking, or at least some type of electronic currency system. But it begs the question. We've moved away from the gold standard for the U.S. bill, and cryptocurrency is kind of built up on the currency of what people will pay for it. It's kind of the same for modern currency. It's kind of our imagination that gives it money. It's the question is, do we want to pay for it? Do we want to do it? Do we want to hop in? Do we want that to be our investments? I know a lot of banks, government don't want to because they can't control it. But if they can control it, which inevitably they'll somehow be able to, or they'll get a large portion of it, crypto might be the future of banking.
So cryptocurrency is like one. I think one of the greatest pros of it is like you talked about of how easy it is to transfer to another person. Like even like a nominal, like not a nominal amount, but if you're gonna go and try and get out like buy a new car or something, or buy a used car at like 16,000.
Was that half a Bitcoin?
Something like that. Yeah, half a Bitcoin, but also it's like the easiest way to do it is to slowly like withdraw like a couple $100s a day instead of just going to get it all at once. And it's frustrating because it's like that's my money. Like why can't I go and get my money?
That makes too much sense, Nick.
But with Bitcoin, all your money is easily transferable and available. So there's not like the 3-day waiting fee or 3-day waiting period and like all the fees, and you got to get like a wire, like you got to go to the bank, and it's just it makes all your money accessible and usable immediately, which is awesome. And obviously that's a better product than the banks are offering. So yeah, they want to get involved in it so they can get some money in off the top. So yeah, and at the end of the day, like we talked about, taking the U.S. dollar off the gold standard, it's all a fiat currency, which is basically means it's not backed by anything. So the U.S. dollar isn't, like we said, backed by a gold standard. There is no, it's just that it's not, doesn't represent anything.
It's It's fiat is a fancy word for imagination, in my opinion.
Yeah, and so like the very first, how don't you call them, like currencies were issued like you're going back to like Mesopotamia kind of period where they're issuing, like you have this much and it's redeemable for this much grain, like something like that. That's not what this is. This is just, we believe this is worth that much, and because of that, that's how much it's worth. You can't take $1 and say, I need this much gold. I want my 40 cents of gold from this. It's not anything. And that can scare people, which can, you need that to be redeemable for something. And that's what causes a run. If they think the economy is taking a downturn, they know that dollar doesn't count for anything. It's not redeemable for anything. You're not going to get gold out of it. You're not going to get grain, whatever else your currency is representing. So you need something that it's redeemable for. And I guess in a sense, Bitcoin's just like it is the same way. You can't redeem a certain amount of Bitcoin for gold either, but you can easily transfer and you can get it whenever you want.
Well, to point out, you can't. There's a limit on how much Bitcoin can be produced compared to currency. Currency they print every single year.
Right. It is. Well, Bitcoin is finite, and I guess Ethereum is not. Ethereum probably wouldn't be a fiat currency, right? Because it's redeemable. It's not redeemable, but it represents a certain amount of a product. We might be getting too far into the weeds of something we don't understand, but yeah, there is a finite amount of it. We can't just print more. And okay, speaking of printing, I'm not sure how true this is, but I heard that North Korea has a U.S. printing press, and they're just like printing American money for shits and gigs.
Oh yeah,
to devalue our currency.
Oh yeah, North Korea is the best forgers of U.S. currency, and then I think the following is somewhere in South America. I think it might be Colombia. They used to be. But North Korea is the best at manufacturing U.S. currency. They either it's to get money because they're a very kind of poor country, or it's to hurt us financially. Yeah, North Korea, from my understanding, is number one at making forgeries.
So just something to think about currency.
It's just cotton with literally jeans thrown in there. That red and blue is from jeans. It's just cotton pressed, and then the ink has to be non-active to iodine, and the only really hard thing is the rainbow strip and making sure the serial numbers don't overlap. The watermarks are easy. Anyone who's done art class or messed with paper can create a watermark. It's the U.S. The U.S. bill compared to the rest of the world is kind of garbage. like physically. It's actually, I think, one of the highest bills currency currently, but what it's actually made of is kind of garbage.
Yeah, and so the disadvantage of a currency that doesn't represent anything is that it's supposedly more predisposed to ups and downs, whereas something back to a gold standard, the price of gold has gone up and down as well, whereas the price of silver has been relatively consistent. But like, I guess, like Bitcoin, there's a certain amount. Silver, there's a certain amount of silver, but there's also not. I
Until
guess,
we
I don't
get
know,
to
at the same time,
space.
we can find more. And so having it tied to that, people will feel good knowing that the idea is that if you know that that dollar is tied to a certain amount of something, worst case scenario, you can get that much for that dollar. And so you're not going to freak out. But when you know that that dollar is meaningless and the price of that dollar keeps going down, you got to spend it to get something that is worth something, or figure something out.
Yeah, I just love how every country in this world uh is built on imagination. Like, yeah, our this thing that you wear around your on your waist, these things that exactly made from your pants, your jeans, this is worth $50. $50 can buy this and this. It's not backed by anything, but you need to
Okay.
believe us.
Speaking of imagination, why is every country's answer to rapid inflation print more money?
Inflation is it does a whole out of left field. Inflation kills me, especially with the world how it is right now. Inflation, I have not drank enough to get into inflation. I'm gonna bring it back to something I know and I'm passionate about, and I can talk about sober or drunk. Is how banks give all our information to the government, pretty much.
So I receive a 1% interest rate on my savings account, and the government receives all my information.
Actually, not too far off. So, depending on whether it's state or federal bank, different rules, different regulations. But for the most part, the IRS, you never fuck with the IRS. IRS are our champs. There are two undefeated winners in the entire world: the internet and the IRS. Oh, sorry, three, and Father Time. They will always win. Those three shall always win. The banks, by law, have to give a lot of information to the government about taxation, to the IRS, who's moving what currency. And the Bank Security Act made banks to report any deposits 10,000 or over directly to the IRS. So you have to either fill out a form. I think it's something 35 form to fill out to deposit 10,000, or the bank does it, not quite sure. They directly tell the IRS that you deposit this much. The IRS will then tell all the local and state jurisdictions that you just did this. And if I had $10,000 in cold hard cash and deposited it, it would take weeks until I was able to spend it in my bank and my credit cards or debit card. It takes weeks and a lot of time for the IRS to process it, figure out where it came from, make sure it's legal, and then deposit it. They check the serial codes, they check they're not forgeries, and then register it. This is where I get a little more angry. The Biden and his administration has tried to make this affect the Bank Security Act by making the value go down to $600. And this is for non-paycheck. So the $10,000 right now, as it stands, is if I have a paycheck biweekly or weekly that's over $10,000 and it's consistent, then the IRS doesn't care about it. But if it's not consistent, like it's 10,000 here or there, then they care about it. So if it's a paycheck, they don't care about it. Biden and his administration wants to make this value of 10,000 all the way down to $600. So if it's not a paycheck and you deposit over $600 or more into your bank account, you'll have to fill out paperwork. The IRS gets notified, and all the local and state jurisdictions get notified that you deposited $600. That pisses me off.
And well, here's why, Mike. So all the mills in Oregon, the state wanted to know how many emissions they were putting off. So the state said we have to look at how much emissions of CO2 all these operations are producing. Why did they want to know that? It's not so that they could stop global warming. It's so they could tax it. So why do they want to know every time you put $600 in your account? It's so they can tax it.
Yeah, no,
That's
I
why.
completely agree. In fact, it was so. In order to get favor on this, they changed the $600, and this is quite recently. If I remember, this was changed November 13th of 2021. They flip flop from $600 to raising it. So a lot of people don't get taxed based on interest gain fees. So like housing department, like pretty much there are workarounds to not paying taxes, to not showing the IRS how much money you actually make. Like some people might make, I don't know, $10 million but only pay 10,000 in taxes. Some people just because they, forward their money, invest their money, shift their money to assets rather than cold hard currency into a bank. Well, since the Biden administration was so disfavored about the $600, they flip flopped it, as I believe it was November 13th, 2021, to now target people who don't directly deposit money. So this would extend to the interest gained on your investments in property, which would directly go to the IRS to figure out how much taxation you should be charged, what your taxes should be. So this is to target people who are smart and people who try to move around taxation. In my opinion, don't hate the players, hate the game. Government set it up. Government is really good at not paying taxes. In fact, they don't think government pays any taxes. They collect taxes. So I'm not. I understand where the 10,000 comes from. Like you don't want drug dealers, you don't want illegal purchases, stuff like that. I think 10,000 currently is a good amount. Probably a sunset law needs to put on that so we can change with inflation. But $600 doesn't make sense to me. I mean, hell, if I'm a 16-year-old kid, 17-year-old kid, got to go to college, and it's Christmas, a lot of my family members might give me cash, and I'm going to put in the bank to pay for my college. That's gonna probably go over $600, and I have to fill out a form.
Family members or people you were selling drugs to, Mike?
I plead the fifth. That's a joke, by the way. Please, FBI, don't come through my door. But yeah, no, that's ridiculous to me. I'm happy it's kind of getting on the decline and they're switching to targeting rich people, but at the same time, I'm not the happiest with it. I guess I'm happy they're not attacking me, they're attacking others, which is not great, but for the moment, it's not on me.
Yeah, we should do a ethics of tax podcast.
Nick, there's not enough vodka in the world for that.
Be wild.
That's a handle for each of us and a lot of pizza. But speaking of government not paying taxes, boy, Nick, we talked about it. They're really good at bailing out banks. They're really good at helping people who they take a lot of taxes from. In case people don't know, if you're a federal insured bank, your taxes pretty much go directly to the central banks, which is pretty much the Federal Reserve, which is, well, you want to protect your money makers. And like we mentioned, I think it was 6-ish, could be 7. I don't quite remember. Times banks have been bailed out in U.S. history, which I did not think it was that much. But they all, from my research, all stem from when we moved away from the gold standard.
Yeah, and then I think also this kind of leads to the ethics of banks being insured, and the argument is insuring banks allows people to not lose all their money and it's supposed to stabilize banks the same way a gold standard would, so there's no run on the banks because they know it's FDIC insured, so they'll get up to $250,000 of their money per each account. The opposite argument is, and I think it's not the worst argument I've heard, if banks know that they're going to get bailed out, there's no incentive to not take riskier loans. Because the worst case scenario is they get bailed out. So like we talked about in the very beginning, it's not like gambling, because gambling there's a chance you could lose. Now, if you're a bank and you gamble on subprime, if you gamble on, getting all my words mixed up, if you gamble on, like, say, mortgages that go bad, you know if it gets very super bad, the government's going to be able to bail you out. Now, if I go and play blackjack and I lose, the government is not going to be able to they could bail me out, but they're not going to.
Is it bad? I'm thinking of Austin Powers, and they're playing blackjack, and he's got a 2 and a 3, and he goes, I think I'll stay, because I also like to live dangerously.
Dangerously. Yeah. That's essentially, damn, that's the meme. That's it's like someone else is footing the bill, so why not?
Oh, yeah. I mean, like I mentioned with mortgage agreement versus mortgage loan are two different things. A lot of economics, all right, this is a conversation for another time, but I want to put this out there. A lot of what the economists say is let the market dictate. Surprisingly, I don't always agree with the economists. Sometimes I think they're not taking emotional and other factors into play. But if you're, as an agency, dumb enough to give, I don't know, $100,000 in a loan to a person with a credit score of 50, you're kind of a moron. You kind of set your money on fire and expecting daddy to bail you out. At some point, you got to learn from your mistakes, right? And just a little fact, the the '08 bailout was a 700 billion bailout. Also want to point out the infrastructure bill is over $1 trillion, but neither here nor say.
Yeah, is it bad that the thing I remember most in the news from that time is Modern Warfare 2 came out with the stimulus package as a new DLC?
I do not remember that at all.
Oh my god, I thought it was the funniest shit I had ever heard. So they came out with like the first, I think it was like the first round of new maps for Call of Duty, and they called the DLC the stimulus package after the bailout.
Oh, back when Infinity Ward used to be good.
Yeah, I remember.
But it is very interesting on how, I mean, to literally have not just other investors' money, but the government as well. I mean, think about it. You're not gambling with your own money. You're gambling with people who give your money. You give them a certain percentage of your winnings when you win. And if you lose, the government backs it up. Nick, we need to raise capital and start a bank. It's like a win-win situation.
Yeah, I think you need to have a large bank to get bailed out. I think a lot of small banks went under every time something like this happens.
Ooh, that is a good curiosity. I wonder how that 700 billion was spent, and I wonder on what banks survived and what didn't. I mean, obviously the big name brands survived, but I wonder. I'm thinking, Nick, this is just me thinking out loud. I'm thinking a lot of the small banks survive because they can't afford to be dumb. They have to play it smart to survive. I'm thinking in that middle in the ground where they're a small bank, but they're too dumb to think they're a large bank. I think those are the ones who got weeded out. That's just me thinking off the top of my head.
So far, it says 27 banks closed in 2008.
That's it?
And then in, I think, 2007, 27 banks closed. And as of December, yeah, and 25 banks closed in 2008.
That's
So less banks closed in 2008 than 2007. And I'm looking through the list and I don't see any name brand banks. It's all small, like single banks.
yeah, no, for those wondering who might be international listeners, credit I don't know if credit scores. Oh, we only focus on US banks. I don't know how other banks work. It was hard enough to figure out how my own country's banking system worked, let alone foreigners. But credit score is pretty much what is the percentage of risk or percentage that you'll pay back whatever I loan you. So if I'd say it's out of 100 and your credit score is like 97, I have a 97% chance you're going to pay me back. So you're a good risk. That's pretty much how credit scores work. And to order to increase your credit score, you need to take more loans so you can pay it back off. So you're like, oh, you actually paid it off, so your credit score increases. Oh, you're actually a calculated risk that actually pays it off. Your risk reward system is much better than we previously thought. Which surprisingly, I did not learn in public education. I had to learn myself.
Yeah, I just kind of pieced how that worked together through
Being an adult.
commercials on the TV and being an adult, I guess. Trust our words, I guess. I don't know what I'm trying to say here.
Trust no one, do your own research. Again, we're fools with a capital F.
We are idiots. And we are way out of our league here. If you couldn't guess, I mean, you probably couldn't guess. We didn't give any clues on this one, but I grow trees and Mike makes things. So we don't do this
Yeah.
for a living.
Is an engineer blue collar or is it white collar? What collar is engineer? Light blue? It's a mix.
I yes, light blue.
Okay, yeah, I don't deal with that much bureaucracy and government regulations. I might deal with like, hey, you have to pass, welding
So
inspections.
in our jobs, the government actually regulates us and keeps us from doing what we want to do, whereas in banking, they help you do what you shouldn't do.
Okay, all right. Let me rephrase what I was saying. In my degree, it's my field. It's the minimum. Like you gotta. If you step on this floor, the floor can't collapse. Pretty much, it's like don't fuck up. That's pretty much our regulations. Don't fuck up. Uh,
And then in the banks, it's like, if you fuck up, we got you. It's okay, little buddy.
wink, wink, nudge, nudge.
It's the spirit that counts.
Oh, well, this might be a little off topic, and feel free to ignore me and go to a different subject. But we've talked about it a lot with the gold standard. We talked about a lot on how that's kind of like how inflation happens, how you know banks take risks that are unnecessary. What percentage of currency should be backed? Because I think a currency should be backed by either rare minerals or something. It should be backed by something, in my opinion. And first off, do you agree with that statement? And if you agree with that statement, what percent of currency do you think should be backed?
I'm thinking about like when the colonial currency was kind of first invented. Basically, one of the colonies had to pay their soldiers, didn't have money at the time, so they give them, or sorry, bonds. I was thinking of bonds, but I was just thinking of like it was redeemable for like tobacco or something,
Or
right?
Russia giving
And
their
it's
troops
just
vodka?
yeah, it's like does every currency have to be a gold standard, or does some currency have to be like like the currency of Idaho? You get X amount of potatoes or timber or like per Idaho dollar, or in Oregon you get like X amount of cranberries or Subarus, something like that. And but I guess essentially that's also kind of, I feel like what like cryptocurrency is. I don't know. I like the idea of money not being imaginary, but I that's not entirely practical. I get that. And speaking of fees, like, can we talk about how stupid exchange rate fees are? Like, holy shit, you don't have the technology to figure out how many euros my dollar is? Get the fuck out of here, Bank of America.
Why can't again, crypto sounds better and better every single day. It's universal. It's like oh, Bitcoin's this much? Okay, one Bitcoin. Yeah. Like yeah, that makes complete sense to me. To answer my own question
So what a
before you switch,
yep.
I agree the currency shouldn't be 100% backed because that way allows for inflammation. Like a lot of our money isn't physical. A lot of monies are on plastic credit cards, debit cards, investments. It's not physical. It doesn't exist. It's imaginary banks. Um, but I think a small percentage should be composed of percentage of the rarest minerals in the universe or the world, like tanzanite, Laramar, can't really pronounce it, alexandrite, like the rarest stuff. Like a dollar is one
223 ammo during the
oh
pandemic.
well, I think a dollar should be like all right. So say you have 100 grams of the rarest mineral in the universe. The dollar should be one should be 25. It should be 0.05% of that. It should be there should be something we all relate it to, so we understand how much it's actually worth. I I don't think all our currency should be like that. I think it should be a whatever it is by half. So say 1 gram is $50. So 50 bucks would count for 25% of the 50 grams. So in order to buy 50 grams, you need $100, so to speak.
Yeah, I kind of like, and
You like,
this is the problem. I haven't researched this, so I don't. I'm sure there's a number that's an actual like this is the number that would be perfect. But I like the 40 cents to the dollar for when we had the gold standard, right? Because it's like worst case scenario, you still get 40% of of what you had at the time. So if everything goes to shit, you still get like some like a little below half, but you're not out for nothing. Like if it's, below 1%, I mean, it might as well be not tied to anything.
Oh yeah, no, I was just using like a dollar. Like a dollar's 1%, so half of a dollar percent. So mine was like at the 50% mark.
Okay.
But no, I mean, I think some percentage should be accounted for something. Like the kilogram is a physical thing. There's like a weight. I think it's in England or Germany. That's where we get kilogram from. That's the standard. We need some standard to base our currency. Gold and silver, to me, as we venture out to space, is going to be kind of out the window. There's so much gold and silver out in space. So it's probably something above iron. What's iron? 42 on the elemented period. Um, Iron is what found in the sun. When the sun's collapsed, that's when we get other minerals and stuff like that. So I don't know. Maybe base it off of uranium, something that's finite. I don't know. But you were saying something, Nick, before I interrupted you.
I was just tossing, like, we talk about how Bitcoin and crypto, you can move around instantaneously. I guess further to this question, like a global currency, like one currency, like not a US dollar and a yen and a peso, like just there's one currency together. Like how, because all the economies would be tied to that single currency, so the value would be spread across everything. So you're spreading your risk. But I feel like if everyone was on the same currency, and I didn't research this, so I could be and most likely talking out of my ass, but I feel like that would reduce inflation because say like some area is going through like terrible inflation. Well, the cost to build that hasn't gone up for everyone else, right? So like I don't know. I don't know how that
Well, I
works.
think the world's already done that, Nick, with gold and silver. I mean, how many cultures, civilizations all valued gold? I think we already did that with gold.
Well, the Spanish really liked
Yeah,
it.
that's for sure.
Like really liked it.
If I was in England with a one gold coin, maybe say half inch in diameter, and went into the Aztec Empire, I would probably be able to buy the same amount of stuff than I could in England. I think it'd be pretty close. So I don't know why we don't go back to
I
that.
feel like you'd be able to buy a lot more in England.
All right, maybe that was a bad example. Maybe let's say Italy. Let's say a country that actually has not cold, depressing weather and also has influx of trade at this time. Because the Aztec Empire ended in the 1600s.
Couldn't tell you.
Okay, well, all right. Let's say Italy. I would say a gold. All right. Definitely, there's going to be a discrepancy between a rich nation and a poor nation, 100%. But the Aztec were solidified at their time, and
But I think they didn't they have a lot of gold? So like it wouldn't be worth as much there than it would be in Spain
just because they have a
or
lot doesn't mean they're
England.
spending around moving in currency. I mean, it could be in reserves, could be holded by the nobles. It could be holded by the individuals. Doesn't mean it's being transferred a lot. If the only time things really go down in value is if there's a lot of it and easy access. Just if there's no easy access, then it's not. But anyhow, shut up and let me explain my hypothetical and deal with it. So you have two countries, both monetary, about the same richness. So I'm just using Aztec and England. I'm sticking with England because fuck it, why not? A gold coin on kind of neutral, even economic scales will be pretty close to each other and buy the same things. For a poor country, I'll be able to buy more things because it's more valuable because they're poor, they need more stuff. So, say we move from the Aztec to the Incas in Chile. I don't know. That's the same thing how kind of the US dollar bill is, but except it's not backed. It's not a physical thing, it's just a representation. And what I'm trying to get at, Nick, is a universal kind of currency, such as a cryptocurrency, which might be a good thing or a bad thing, uh, might be the factor. Because I guarantee you, one Bitcoin will buy more in a poor country than a rich country, but buy pretty much evenly on a rich country.
Yeah, I mean, I think that makes perfect sense.
But it'd be universal. We need to stop. All right, this is a conversation another time, but if we're going to think universally, no longer globally, we need to all get some basic shit out of the way for our planet of like basic laws, basic regulations. Because I'm with you, Nick, with transferring money overseas or traveling or something like that. God damn the fees. They are up the ass with trying to transfer currency to a different currency. Talk about getting middleman for just outright robbery.
Yeah, especially it's not like you're transferring it to like a currency they're not going to accept. It's like it's a euro. It's like about the same as a dollar.
I assume.
Like you can take
Wait
that
a minute.
euro and get money out
Is
of
this
it.
Greece?
Well, it's the same
Well,
currency.
it's also Greece. Greece does not exactly have the most economic grand background. So like, oh, you're going to Greece to lose money. Got it.
Well, that's the whole European Union thing. So I don't deal with that.
But yeah, Nick, to me, after doing all this research, the only difference between a gambler and a banker is a banker can get his money back after he loses.
Yep, that's pretty much it.
Well, this was kind of a crash course on 101 banking. Some fools did dive in, and if you want,
It's a lot of random stuff. Entertaining, I hope. But we went off a few tangents.
agreed. And if people want to tell us some things about banking that we should know about, some things how banking works in their country, where can they tell us, Nick?
You can find us on Instagram and Reddit at Backyard Philosophy.
And you cannot find us on Twitter because there's no way the government will ever finance and bail out Twitter.
Give it a little. I wouldn't be
Oh,
surprised.
I wouldn't be surprised too, and that makes me sad. And out of curiosity, Nick, what are you reading?
I am still reading Max Boot, Small Wars and the Rise of American Power, and I am hoping to finish it soon to just be able to say I'm reading a different book. What are you reading, Mike?
I'm so happy we're friends. I am still reading The 48 Laws of Power by Robert Greene, and I am just about quarter of the way through. So
we've gotten nowhere.
yeah, we maybe collectively we've gotten maybe 100 pages in.
So we are right on track.
Well, we're still moving better than the U.S. government. But that being said, as always, I hope some people learn some things. I hope we were entertaining. And as always, thank you all for listening.
Thanks for listening to the Backyard Philosophy Podcast. We rarely finish a podcast without missing a point we wanted to bring up, so let us know what we forgot. And if you have a topic you want us to talk about, let us know at Backyard Philosophy on Instagram and Backyard Philosophy Podcast on Facebook.